Today we're going through an exact breakdown on how to invest in ETFs step by step. So by the end of the video, you'll have everything you need to get started. Just remember that this video is general in nature and doesn't constitute personal financial advice. You can read my full financial services guide in the description. So let's jump right in. What exactly is an ETF? One of my favorite ways to describe an ETF is the chocolate analogy. When you go to the shops, you can buy chocolates like Mars, Snickers, and more, just like you can buy individual stocks on the stock market. Or you could buy a box of many different chocolates, which is just like an ETF. When you buy an ETF, you're essentially buying lots of little pieces of individual companies. Let's say, for example, you buy an ETF that invests in the top 500 companies in the US. When you buy this ETF, you're essentially buying lots of little pieces of the world's biggest companies, like Tesla, Apple, Microsoft, and Amazon, instead of having to buy them all individually, which can be quite expensive. ETFs are generally seen as less risky than investing in individual companies because even if one company in the ETF performs poorly, there are also heaps of other companies in that ETF that could have performed better that balances it all out. So now we know what an ETF is, let's have a look at the different ETFs available. To do so, you can head to this website called marketindex.com.au/ASX ETFs. This page is great because it actually lists all of the different ETFs available on the Australian Stock Exchange. And if you scroll down, it actually has different categories of ETFs. So for example, if you're looking for global ETFs with broad exposure, you can simply click on here and it will give you a list of all of the different ETFs that have broad exposure and are also global. This list may look overwhelming because there are so many different ETFs to pick from, but something to keep in mind is you actually don't need heaps of ETFs in your portfolio. You actually could build a diversified ETF with just one ETF or even two ETFs. So here are some popular ETF pairs. The first one is VAS and VGS. VAS is the Vanguard Australian Shares ETF. This ETF tracks the performance of the top 300 companies on the Australian Stock Exchange. The management fees for this ETF are 0.07%. The top holdings of this ETF are BHP, Commonwealth Bank, CSL, NAB, and Westpac. If you invested $10,000 into this ETF 5 years ago, you would have $15,872 today. Keep in mind that past performance isn't a reliable indicator for future performance. VGS is the Vanguard International Shares ETF. The management fees for this ETF are 0.18%, and this ETF suits investors with a time frame of 7 years or more. This ETF invests in 1,500 companies from developed countries excluding Australia, including countries such as the US, Japan, UK, Canada, France, and Switzerland. The top holdings in this ETF are Apple, Microsoft, Nvidia, Amazon, and Meta. If you invested $10,000 into VGS 5 years ago, you would have $19,046 today. Another popular ETF pair with an ethical focus is FAIR and VESG. FAIR is the Australian Sustainability Leaders ETF. This ETF is similar to VAS but with a more ethical focus. The management fees for this ETF are 0.49%, and the top holdings of this ETF are Cochlear, Suncorp, CSL, Brambles, Telstra, and more. Since this ETF's inception, it's returned an average of 6.66% per year. VESG is the Vanguard Ethically Conscious International Shares ETF. The management fees for this ETF are 0.18%. And this ETF is similar to VGS but with a more ethical focus. It screens out companies involved in fossil fuels, nuclear power, alcohol, tobacco, and more. The top holdings in this ETF are Microsoft, Apple, Nvidia, Amazon, Meta, and more. And if you invested $10,000 into this ETF 5 years ago, you would have $19,338 today. If you want to keep your ETF portfolio really simple, an option is to invest in an all-in-one diversified ETF. And here are two options, VDHG and DZZF. VDHG is the Vanguard Diversified High Growth ETF. The management fees for this ETF are 0.27%. This ETF suits investors with a time frame of 7 years or more, and this ETF invests in 90% growth assets and 10% income producing assets. This ETF is essentially an all-in-one diversified ETF that has many different ETFs inside this ETF. For example, the Vanguard Australian Shares ETF, the Vanguard International Shares ETF, and some other small cap and fixed interest ETFs. If you invested $10,000 into this ETF 5 years ago, you would have $15,824 today. And another diversified high-growth ETF, but with a more ethical focus, is DZZF. This ETF suits investors with a time frame of 7 years or more. It invests in 90% growth assets and 10% income-producing assets. But this ETF invests in companies with a more ethical focus. The management fees for this ETF is 0.39%, and the asset allocation of this ETF are Australian bonds, international bonds, Australian equities, and international equities. Similar to VDHG, this ETF essentially invests in many different ETFs. And since this fund's inception, it has returned an average of 8.04% per year. Before you start investing in ETFs, it's recommended to have an emergency fund. An emergency fund is 3 to 6 months of living expenses saved in cash in a bank account. And this is so that you don't have to dip into your investments at a bad time in the market. So just in case something happens, for example, if you lose your job or if any unexpected emergencies pop up, you have some cash on hand saved that you can dip into and rely on. So now we know more about ETFs, the next step is to sign up to a broker. There are many different investing apps and brokers out there, each with pros and cons, but the one that I personally like using is Pearler, who is also the sponsor of today's video. I've been using Pearler for the past couple of years, and the thing that I really love about them is they have this really cool auto invest feature, which I'll show you later in the video. So I can essentially set up my investments to run on autopilot. And if you would like to try Pearler for yourself, you can use my code Queenie for a $20 credit. There are 2 different options to make an investment with Pearler. You can use their desktop version, or you could also use their mobile app. I personally like using their mobile app because it is really convenient. And now I'm going to show you exactly how to buy an ETF using Pearler as an example. Once you've created an account, the next step is to deposit money into your account, and I'll show you how. So I simply click here and then deposit cash. Here I can put in how much I would like to deposit, for example, $1,000. I have 2 different options to deposit money, using PayID or using my BSB and account number. I personally like using PayID, so I just copy this, go into my banking app, I put in the PayID, put in how much I would like to deposit, for example, $1,000, and then I simply click on Send Money. Now the $1,000 has landed in my account and I can make an investment. Pearler also has this really handy blog that outlines the top 10 ETFs that Pearler investors invest in. So to make an investment, I simply click on Explore, Invest. Pearler gives me a list of popular ETF options, but I can also simply click on Explore and search for the ETF that I would like to buy. For example, VDHG. Here it gives me more information about the ETF. To buy it, I simply click on Buy. I put in how much I would like to invest, for example, $1,000. And then I click on Place Order. I have 2-factor authentication stored on my account, which I recommend you do as well. And I just made an investment in VDHG. As you can see, it really is as simple as that. If you have the skills to buy something when you're shopping online, then you also have the skills to make an investment. It really is amazing to see how far we've come with the technology to make an investment. Don't forget, if you would like to try Pearler for yourself, you can use my code Queenie for a $20 credit. By the way, we are also in a new studio, so if you do like the new studio, don't forget to give this video a like and subscribe to this YouTube channel. This is optional, but I think it's a really cool feature that Pearler has, which is the option to set up automated investments. This is what I personally do, so then my investments just happen every single month without me having to think about them. To set up automated investments, I simply click on the Automate tab. Here it gives me some different options on how to contribute money, and I simply click on Recurring Deposits. Here I can choose how much I would like to invest, for example, $1,000 every month. Here I can choose to invest once my balance reaches a certain threshold, or I can buy the dip. I simply click on Threshold when my auto invest shares reach $1,000. And now I can build my ETF portfolio. I can simply search for some ETFs here, for example, VDHG, I can add it, and I can choose how much I would like to allocate into each different ETF. In this example, I'm just going to allocate 100% to VDHG, but another option is I could also invest in an ETF pair and let's say, for example, allocate 80% of my portfolio to VGS and 20% of my portfolio to VAS. So it's up to you if you would just like to auto invest in one diversified all-in-one ETF, or if you would like to have an ETF portfolio of many different ETFs. You can set the different allocation amounts in Pearler. And now it gives me a few different options on how I would like to invest. I simply click on lowest share and then review and then save. So now that you know exactly how to make an investment in an ETF, let's talk about taxes. There are two main taxes on shares or ETFs. The first one is taxes on dividends. Dividends are essentially the profits that some companies decide to distribute to their shareholders. A lot of shares and ETFs do pay dividends to their shareholders. This is usually anywhere from 1 to 5% per year. You can choose to have your dividends paid out to you in a bank account, or you can also choose to reinvest your dividends back into whatever stock or ETF you have purchased. In both cases, you still do need to pay tax on the dividends that you receive. Basically, what happens with dividends you receive is you need to put it into your tax return as income, and then it gets taxed at your marginal tax rate. So let's say, for example, you earn $75,000 per year and you receive $1,000 in dividends. You put in your taxable income, which is $75,000 per year from your salary, and then you put in the additional income, which is your $1,000 from your dividends, and then you get taxed at your marginal tax rate, which would be the $45,001 to $120,000 tax bracket. The other tax on shares or ETFs is capital gains tax. This is essentially when you sell your shares or ETFs for a profit. So let's say, for example, you buy an ETF for $1,000 and then you later sell that ETF for $1,500. Your capital gain would then be $500, and then you add this $500 into your tax return as income, which will be taxed at your marginal tax rate. Something important to note about this point is there's actually a 50% capital gains tax discount if you hold your shares or ETFs for more than 12 months. So this is one of the ways that the tax office does like to incentivize long-term investors. And lucky for you, you don't actually have to track your dividends or your capital gains tax manually. You could use a tool like ShareSite, which does it for you. It's free for up to 10 holdings, and they also have these amazing tax reports that you can send to your accountant, or just use when you're submitting your tax return. You can connect ShareSite to many different brokers, including Pearler, and also heaps of other brokers. If you have investments with multiple different brokers, it's also really cool to see your full portfolio in the one place. If I head over to the Reports tab and scroll down, I can create a taxable income report, and this will run a report on all of the dividends that I have received. And here it will run a report on my capital gains tax. Something important to note is you don't need to pay capital gains tax if you don't sell any of your investments. You only need to pay capital gains tax when you sell your shares or ETFs for a profit. So there you have it. That is exactly how to invest in an ETF step by step. And write us a comment below with the word studio in it, just so we know you watched this video all the way through. Thank you. Bye.